Hello and welcome to our second mining pitch battle of our Mines and Money online global 22nd to the 24th of June event, sponsored by Trade and Investment Queensland. We've got an absolutely fantastic pitch battle lined up for you today with 3 fantastic mining companies and 5 very tough investor judges. But without further ado, let me introduce you to today's MC, who is Jochen Staiger, Chief Editor for Commodity TV. A warm welcome to you, Jochen.
Hey Andrew, thank you very much. Also from my side, very warm welcome and hello here from Switzerland to the Mines and Money pitch battle. Yeah, honor and pleasure again to moderate this, and I think most of you know exactly how it is going, but let me first introduce our 3 contestants, please. We have Jurie Wessels, non-executive chairman of Vanadium Resources. Hi Jurie. Then we will move on with Fraser Bucken, Corporate Development and Investor Relations of Andean Precious Metals. Hi, Fraser. Hello. And then last but not least, we have Kerry Knoll, the Executive Chairman of Generation Mining. Hi, Kerry. Hello. Hope you are doing all good. And not to forget, because we are here in something like Shark Tank, we are a little bit more polite, but we want to roast our companies, of course, a little bit also with our CEO setting some tough questions. And this is why we have 5 fantastic judges here today. And let me start to introduce you to you also. Michael Colligan, partner of Blue Lake Advisors. Hi, Michael. Then we have Victor Brophy, partner of Terra Vista Partners. Hi, Victor. Then we have George Petker, the founder of Versatech Capital for Mining. Hey, George, with the beautiful landscape in the back. Then we have Taiwo Adeniji, Senior Director, Investments Africa Finance Corporation. Hi, Taiwo. And last but not least, also here, Paul Mainwaring, Associate Director of Endeavour Financial. Hi, guys. Yeah, great to have you all here on the show. And as you know, our contestants will present for 3 minutes. I'm very exact because I have my lovely buzzer here. And then we have 8 minutes Q&A with our judges, yeah, to really get good questions. So let's get started. Jurie Wessels from Vanadium Resources is the first. So please, Jurie, I would say the floor is yours. And I have my lovely timer here.
Thank you very much, Jochen. My presentation is about unlocking steel poor drift as one of the world's largest and highest grade vanadium projects for a new era. I'm going to start with what is the demand for vanadium. It's traditionally been for steel, but there's a growing market in vanadium redox flow for the renewable energy market. That energy needs to be stored when the sun is not shining and when the wind is not blowing, then that energy will be used. Bloomberg is expecting that market to grow exponentially, and that is also shown now in the demand for vanadium. There's a growing deficit. What the source of the vanadium is from steel poor drift, which is VR8's vanadium project in South Africa. It's in the well-known Bushveld complex, and it contains all the first order qualities one would expect from a property that is competitive and profitable. Firstly, it's got a very large resource. Secondly, it's a mineable resource in the sense that it's shallow, dipping, and it's got wide packages to be mined. It's got the second highest grade in the world, and its mineralogical makeup makes it possible to concentrate properly before it goes into the salt roast plant. The project is the largest, as you can see there. VR8 is by far the largest of all our competitors that we list there, and then it has got the second highest grade besides Largo in the world. We are going to use a very small portion of that resource. We have 662 million tons and have recently completed a pre-feasibility study to show that we can put that through a salt roast leach plant. Then at a capex of $200 million, we will then be producing, after the expansion of $147 million financed by our free cash flow in year 6, we will then produce 39 million pounds of vanadium pentoxide at $3.08. The financial returns from that is significant. The EBITDA life of mine is $5.8 billion, 231 million per annum The NPV is 1.2 billion. Our free cash flow is 139 million per year for 27 years average. The payback is 25 months, and our IRR is 45%. The financial returns, what we expect is also we want to raise $5 million to do the DFS, and then that is the timing that you can expect from us, and you're getting that done. Why is VRH's project world class? We have phenomenal financial metrics. Our competitive OPEX and CAPEX is in the lowest quartile. We are only mining 12% of our resource. Our extended resource then facilitates debt funding, and we've recently acquired a ESG technology that could unlock possibly the other credits in the mine, and that would also then be additional feed.
Perfect.
So yes, I hope I've made my time.
That was absolutely perfect in time. Thank you very much for this. And now 8 minutes with the judges. Who wants to do the first question here, please? Yes, Michael, please unmute yourself that we can hear you. Yes.
Quick question. What is your status as far as Black empowerment is concerned for the project?
We have 26% Black economic empowerment, of which 13% is broad-based. And the Black economic empowerment component of our shareholder base would then be contributing towards the CAPEX as well, and the other necessary expenses.
Okay, so that percentage would not be free riding. That would be fully paid percentages. Okay.
Correct.
One other question. You mentioned other minerals. Have you got a valuation for the potential for other minerals?
No, we don't, because it's traditionally the salt roast process sterilized the titanium oxide and the iron in the ore body. But we have acquired a technology recently that we expect to be similarly applicable as it was in zinc in this ore body, which is vanadiferous magnetite, and that we would possibly get the titanium oxide and some of the iron credits from that technology, or a vanadium pentoxide high-grade electrolyte quality powder.
Thank you.
Who else has a question? Yes, please, George.
On the acquisition, there wasn't specific detail as to, was there a cash component to that, all shares, or could you just explain that, please?
Yeah, there wasn't a cash component to it. We would be spending 650,000 Aussie dollars on a PFS on it initially, and then we would spend another $1 million on it to do a feasibility study. Then we would own 75% of the technology and the IP as well. And then there's a royalty scheme, which then under license, our company would then produce the products, and then we, of course, would be earning 75% of our own income as being the licensor, I mean.
Mm-hmm. Yeah, please, Paul.
Yes, so, sorry, I missed the timing a little bit on now the PFS is out. So could you just do a quick recap on that in terms of offtake and then steps to construction?
Yes, we expect to do, the PFS has been finalized. We announced it yesterday. Our share price performed nicely today. It will take us about 18 months to complete the DFS. And then once a decision has been made to do the mining operation, we expect to take another 18 months to do the construction. Excuse me, it will take 9 months to do the DFS and 18 months to construct. I've had that the wrong way around.
So 18 in total and 9 and 9.
Correct. Yeah. No. 18 for construction, 9 for DFS.
Okay, got it. Sorry. And yeah, just on the slide that you put up in terms of size of deposit and grade, could you talk a little bit around how that translates into cash costs in comparison to the other assets?
Because we have the second highest grade, the ore body in situ has got one section of it, 188 million tons, that is running at 1.33% in situ. That upgrades then to 2.2% in the concentrate. Because that concentrate is then put through a plant that gives us a higher yield on the product, we're getting to a cash cost per OPEX cost per pound of $3.08. That competes very well with any of our other competitors, and we expect to be of the lowest in the pack, in the lower quartile.
Okay, thanks, Jurie.
Taiwo, you were next. Please unmute. No, we cannot hear you. You have to unmute yourself first. It's on the left side. Yeah. Now we can hear you.
Now?
Yes.
Yes. Your product is used largely in batteries, I understand, which obviously it's the engine now in terms of renewables, etc. I'm just wondering the susceptibility of this product to changing technology. What in the next 3 or 4 years before you get to the market, how susceptible is the product to changing technology?
Well, initially, vanadium's application is about 92% on steel, and there's a growing segment of it that is towards batteries. We expect that portion of the demand for the vanadium to grow exponentially. For every 100 megawatt hours that needs to be stored, 1,000 pounds or tons of vanadium pentoxide is required. That's about 10% of what we will produce initially. There's nothing else that we think that can replace vanadium in large storage capacity. Unlike lithium, it doesn't have a cycle or a lifetime. It can be reused and it can discharge and charge. That is the vanadium pentoxide VRFB battery that can be charged and discharged at the same time. It's due to its valency and its chemical composition that it has got that quality, and there's no other element at this stage that, as we believe, has got exactly the same kind of qualities to store energy in the same way.
Yes, Victor, please. Also unmute yourself. Yep.
Yeah. Hi, Jurie. You mentioned that you're only using 12% of the acid. I'm a little bit unclear on that. Can you elaborate a little bit on that?
Well, it's because it's so large. We have 660 million tons of the resource at 0.77%, and then we have 100 of that. There's 188 million tons at 1.23%. We are using a small part of the high-grade portion initially, about 40 million tons. And then of the medium grade, we're using another 40 million tons. And that's why we're only using 12% of the 663 million tons that we have. That size of resource gives us the leverage that we need, we think, to attract the right funding for this in the form of gearing that will allow, because of the size of the asset base, and hopefully that will play through to our equity as well.
Okay, thank you, Jurie.
Time for one question. Yes, George.
Jurie, the amount of money involved, what does that mean as far as you raising in the marketplace and when?
Well, we're now going to raise for the DFS. We're going to raise $5 million. That shouldn't be a problem. Then as far as the capex is concerned, the initial capex, $200 million of that we will raise then on the market. We believe that we can give more than half of that. And then the ramp up capital, we will then be able to fund that from cash flow.
Perfect, on the 8 minutes. Thank you very much. That was great. Super. Thank you very much, Jurie. Very interesting story, I must say. And we will move on now with Fraser Bucken, who is Corporate Development and IR from Andean Precious Metals. Fraser, the floor is yours, please.
Thank you, Jochen, and thank you for the opportunity. So the quick basics on Andean. We are a relatively new company. We listed in March of this year on the Toronto Stock Exchange, and we were only actually about 3 years old. In 2018, we purchased the San Bartolome mine in Bolivia from Coeur, and we've been operating it since then. We've produced in that time about 25 million ounces of silver. We have a run rate now of about 6 million ounces per year and an all-in cash cost of about $17. I think maybe that's what makes Andean a little bit unique in the junior mining space. We generate on a monthly basis about $4 million in free cash flow. We have a very strong balance sheet. We have over 100 million dollars Canadian in net cash. We actually have no debt. We have no warrants. We have no legacy obligations with respect to the acquisition. So we're very well financed. We're generating a lot of cash flow. And I think that maybe the primary challenge for us as a business is to extend our life of mine. So right now at a run rate of 6 million ounces a year, we have about 5 years ahead of us. In that period of time, we will, more than cash flow our enterprise value. So there's, I think, an implied return just on our baseline resource. But we've kicked off now a very aggressive exploration program in Bolivia. We've started with a phase 1 drilling program of 10,000 meters, which we'll get results back from beginning in July. But we are also looking for projects on an M&A basis within Bolivia. We're very happy to be in the country. It's proven to be a prolific silver district, and we have very little doubt that we'll take our mine life from 5 years to something closer to 10 before the end of 2021. That's certainly our goal. So I think that's maybe what makes Andean interesting. We're generating strong cash flow. We have a very strong balance sheet, and we've got an aggressive approach on M&A.
Super. Thank you very much. So I even did not have to show the watch here. Fantastic. Questions, please. Yeah, Paul was the first.
Thanks, Fraser. Just a quick one on the recap on the numbers. So 100 million in cash at the moment, no debt. What's your market cap?
About 250 Canadian.
250. Okay. Right, I'm still thinking. I'll let someone else go.
Yeah.
Michael? Michael, you have to unmute first. We cannot hear you. You have to unmute. Yes.
Got it. That's, I think the obvious question from there is dividend policy. Is there one? You're sitting on a lot of cash. Would you be inclined to pay some of that to your long-suffering shareholders?
Yeah, it's an interesting idea, and it's one that we have definitely entertained at a board level. I think it's maybe premature to make that decision now. So we've been public only for about 2 months. We really have done very little on the marketing front. So we haven't exposed the opportunity to very many people. And because the project has performed so well, we haven't been required to finance along the way. So we have a very concentrated shareholder base. So I think before we take on a dividend or potentially a share buyback, I think we would look to expose the company to more investors and to see if we can sort of get the valuation to a level that reflects our financial performance a little bit better.
But it's just that one way of doing that is to pay a dividend.
For sure. Yeah, absolutely something we're considering.
Okay.
George, please.
So my question's fairly direct. Are you going to be an acquirer or will you be acquired?
Absolutely an acquirer. Yeah. If you look at our board of directors, so we have an independent director, Bob Buchan, who was the founder and the CEO of Kinross, Peter Gundy, who ran Neo Materials and was a founder of Potash Corp. We have a board that is built to run much bigger companies than this. We've used Bartolome and the cash flow that it produces as a platform, but we have ambitions to be a multi-asset, multi-jurisdictional company for sure.
Mm-hmm. Victor?
Okay.
Fraser, hi. You mentioned that the shareholder base is concentrated. So is there much liquidity in the shares, or is it very tightly held?
It's very tightly held. That's one of our major challenges. So we have the original group of shareholders still control more than 50% of the company. Eric Sprott owns 50%, and as I think most people know, he's a long-term believer in silver, so I don't think that could be considered free float. And then we only have 8 institutional shareholders, and that was a function of meeting our free float requirements for the listing on the TSX. So it's very concentrated. We trade maybe 200,000 shares a day, which is, I think, a challenge for institutions that are looking to build a position. So we'll have to address that. We'll address that either through M&A or through potentially looking at a secondary with some of the original shareholders. But we're cognizant of the fact that that's a challenge.
Thank you.
Taiwo?
Yes, thank you. I'm just wondering, with the performance of the company as you have read out, I wonder what exactly are you looking for from investors, and what are you offering for it?
Well, hopefully we're offering a strong financial return. I think in the junior sector, we're a little bit unique in that we generate this type of free cash flow, and we'll look to use that either to make accretive transactions or to return that capital to shareholders. I think what we need as a company right now is exposure. So we're relatively new to the market. We have research coverage now from Sprott, and we expect to have more coming from a number of Canadian institutions. But I think for the most part, we're not very well known. We haven't needed to raise money, and that's sort of one of the major opportunities that you have to engage with the market. So we're pushing hard on the marketing front, trying to get in front of investors and to talk about what we think is a pretty exciting company.
George?
This has to do on the resource side. You mentioned that longer mine life is one of your goals, but I was trying to understand. Currently, your third-party ores make up a smaller percentage than what you'd like to have. Could you explain to us the mechanism of that, and how is that reported in your M&Is?
Yeah, sure. So San Bartolome is the only oxide plant in Bolivia. The traditional operating model in Bolivia is focused on high-grade, narrow vein sulfide silver. And if you look at companies like El Oro, you can see that the potential in that business model. Our model is different. We process lower grade oxides, and we have our own in situ resource, which represents about half of our production on any given day. And then we have a number of satellite deposits that are contracted with either the government through the State Mining Comibol or through other private mining companies. Some of those, if they're large enough, report to our M&I. Some of those may not be large enough that it's worth us to drill them off. So we'll simply produce those ounces and not report them through 43-101. So it's a little bit unique in that respect, but we've now got 13 years of operating history, and the model works well and obviously generates a good amount of capital.
Are you paying for the ore?
We actually purchase it based on metal content. So we buy the material, we ship it ourselves, we test it ourselves. Everything is done in-house. It's not a toll milling arrangement.
Thank you.
Good. Yes, Michael.
Yeah, all-in sustaining costs for your current production, and what do your byproduct credits look like?
So I'll answer the second part first. We actually don't have any byproducts. We produce our revenue is 97% silver. We have a small gold component. We do have quite a bit of tin in our tailings, and based on the trajectory of tin, we've been looking at whether or not it makes sense to reprocess that. We have about 10 million tons in tailings at 0.25% tin.
Whoa, that's a mindable quantity.
Absolutely, yeah. SRK is actually undertaking a study on that front now, but I don't think that's reflected in our valuation at this point, because it's a little bit early to say one way or another what that would look like.
All-in sustaining costs?
Oh, yeah, sorry. 2020 was about $15. 2021, we're forecasting $17.50.
Thank you.
More question? Victor?
Yeah, just quickly, you mentioned you're going to be an acquirer. Will those acquisitions be mainly via paper? Will it be cash, or will it be a mixture of both?
It will be a mixture of both. I think we would probably lean more towards cash if it weren't for the fact that using paper at this point may help to alleviate our liquidity issues. So I think we'll have to strike the right balance. Obviously, we've got a strong balance sheet. We don't want to dilute our shareholders unnecessarily, but that's all part of the matrix.
And exactly 8 minutes. Thank you very much. Perfect. Very interesting. And now, last but not least, Kerry Knoll, the Executive Chairman of Generation Mining. Kerry, your 3 minutes. Please, the floor is yours.
Thank you. Just got to share the screen here quickly. Everybody can see that. Why it's not working?
Whoops.
So, Generation Mining, we have an 82% interest in the largest undeveloped palladium project in North America and one of the largest in the world. It's a little over 4 million ounces of palladium in measured and indicated only, and 1 billion pounds of copper and over 1 million pounds of platinum. And, you know, palladium is not a metal of the future like a lot of these green metals. It's a metal of now. It's required in most gasoline cars sold in the world. And the amount of palladium in each car goes up each year with new requirements of various governments around the world. We have had this project only for 2 years. We've done a full feasibility study led by G Mining. It's got a 13-year mine life and can produce palladium for just over $800 an ounce all in. And an average production of 245,000 ounces of palladium equivalent a year. And that of that, about 60% is palladium, and the rest is copper and then platinum, gold, and silver. At a base case price of 1725 palladium, this has an IRR of 30% and a 2.3-year payback. At more recent spot prices of $2,400 palladium, the IRR goes up to 47%, and the net present value doubles to 2 billion Canadian dollars, and the payback goes down to 1.5 years. And our capex is about 665 million Canadian dollars. So you can see the cash flow, and this is of the base case at 1725 palladium. It's well over $300 million the first 2 years, and then it levels out. But that's why we get the very quick payback. We're starting off mining a pretty high grade zone. You know, a lot of people talk about these green metals and how important they are, and they are important, but what they often don't talk about is the inputs that go into making these metals. And we are fortunate to be in Ontario, where literally 4% of the grid is carbon-based. The other 4 large palladium producing areas of the world have significantly higher and mostly coal-based power. So it's probably going to be the greenest palladium produced in the world. So in the 2 years that we've had this project, less than 2 years actually, we did a new resource, a PEA, a new listing, a full feasibility study, and we're 2/3 of the way through the permitting process. This year, we want to finish the permitting process into next year, do the detailed engineering, arrange the mine financing, and also start ordering some long lead time items. We're hoping to start construction next summer, and then followed by production in late 23 or early 24. We got a market cap of only $145 million Canadian. We've got $15 million in the bank, and our peers with $1 billion net present value at the base case and 82% ownership. Of course, we're trading at about a quarter of our NAV compared to 50 to 100% of our peers in the precious metal sector. And we've got a bunch of smart shareholders, Eric, Lucas Lundin, Sibanye, and Cisco Mining, and the officers and directors all own stock.
Thank you very much, Kerry. Great presentation. Oops, I gotta stop that. So 8 minutes now for our investors. Who has the first question? Oops. Okay, Michael.
Yeah. So it's the Sibanye shareholding, is that because of an acquisition, or is that because of an investment?
That is from the acquisition. We bought this project from Sibanye. They're our 18% partner, and they are also an 8% shareholder.
Okay. And the $500 million US investment that you're going to need to build the project, will they be paying their 18% of that?
That remains to be determined. They haven't indicated that whether they will do that or not. They've spent a lot of time over the last 3 months examining the feasibility study, trying to get their head around an open pit. They're, as you know, an underground mining company, and we don't know what their plans are. And they are going to indicate to us. They've told us they're going to indicate to us within the next month.
Okay, fine. So nice short time. Thank you.
George?
Could you please, can you hear me?
Yes.
Okay. Kerry, could you please explain the clawback, kind of the way that the deal was originally set up and what the clawbacks are? It's a bit.
So when we bought this project from Sibanye, they insisted on a right to buy back in. That is, they can buy back enough shares or enough equity in the project to come to 51%. That is a fixed amount based on the feasibility study number, and they have to pay 31% of the CapEx based on certain parameters in the feasibility study, which would amount to about $250 million. So if they choose, they can spend $250 million and buy back essentially 33% of the project right now. There are other alternatives. They have two other alternatives. They could buy us. We only have 145 million market cap and we own 82% of the project. That might make a little more sense. Or the third alternative they have is they could walk away and do a Skeena type of deal where we switch their interest for some shares and go ahead and maybe they put a person on the board and we go ahead that way. So there's three options. They have until July 22nd this year to decide. But as far as the company goes, we're agnostic. If they buy back in, great. We're carried pretty much through to production with their 250 million equity input, because the rest can probably be debt. If they buy us, well, the shareholders will do well. And then the third one is if we go it alone, like Skeena, well, the Skeena share doubled when Barrick made that move. So we expect a re-rating as well.
Super. Next question. Yeah, Paul, please.
Hey, Kerry. Could you talk a little bit around your board and management and building mines and track record?
Yeah, thanks. Yeah, I've started 6 mining companies in my career since starting in 1987. 4 of those went into production. 2 of them got sold at the feasibility stage. I've always focused on building a mine, starting a mining company and getting the project and building the mine. As far as our board goes, or other management goes, Drew Anwell's our chief operating officer. He was one of the key guys founding the mine at Detour Lake. He was previously a senior guy at Barrick. He was running the Porgera mine for them in Papua New Guinea. And he was at Placer Dome before that and has built 2 mines for Placer Dome. As far as our board goes, we have a very, very well-rounded group. We have Paul Murphy, who's the chairman of Alamos. He's a chartered accountant. We have Cashel Meager, who's an operator. He's the chief operating officer of Hudbay. We have Jen Wagner, who is a lawyer and is the senior vice president of Kirkland Gold. We have Phil Walford, who is a reserve geologist and won the Bill Dennis Award for the discovery of the Valentine project. And we have Steve Reeford, who's a world-renowned geophysicist. So we kind of round out the mining expertise, and at the same time, we have all very senior people.
Great, thanks, Kerry. And so in terms of hires, do you think if you want to go this alone without Sibanye, depending on Sibanye's decision, you've got the team that you can build this asset, or do you think you need to bring other people in? It sounds like not.
Absolutely. We've been interviewing, and with the caveat that the people know that Sibanye might, make this a different deal. But if we are going to be the ones to build it, we have probably 4 hires we're ready to go on the technical side to go ahead and start building this mine.
Thanks, Kerry. And just last question from me: First Nations, how are you progressing on those sort of agreements?
So there's 3 First Nations that have a direct claim on this territory. And one of them has waved it aside. They said they're not interested in participating. The main one, which is only 20 kilometers from the mine site, we have signed an agreement in principle with for an impact benefits agreement. We expect that impact benefits agreement to be done by September. And then the third band, which was a little more difficult to communicate with at first, is now at the table, and we're talking numbers, and we're expecting to have an agreement in principle with them over the summer. So the First Nations are all on side. The local First Nations all get money currently from Hemlo, the big gold mine, and Hemlo is running out, and they realize that they need to replace that those contracts and those jobs and all the different things that come with mining, and we're the only one that can do that for them.
Thanks, Kerry. I'll let someone else jump in.
Yes, Victor, please. You have to unmute first.
Sorry. Hi, Kerry. So in terms of the liquidity in the shares, how do they trade like? Trading volumes?
We trade about between here and in the US, we trade about an average of just under 1 million shares a day. We've got about 10,000 shareholders. We're hugely retail. We have very little in the way of institutional. We have maybe 10 institutions, as well as those large shareholders you saw on the screen earlier. And that's largely a result of the way we've done our financings. We've only done 2 financings of any size since we started this company. They were both around $10 million. We've actually only raised $25 million, and we've still got 15 in the bank. So that's, I think, a pretty good use of capital over 2 years to get where we've got.
Yeah, that sounds very good. Thank you.
Taiwo?
Yes, thank you, Kerry. Not so much about your current company, since we only finance in Africa. I'm just wondering, do you have any mining interest in Africa, or do you intend to have one?
We don't. Not at this point. We're focusing on this one project. We do have some other projects in Canada, but even those ones, which are one of which is quite advanced in the molybdenum space, we're just focusing on this one because we're a small company and we want to get this one into production as soon as we possibly can. And we're just sticking with this one for now. But thanks.
Great. Those 15 million you have in the bank, this is enough until it comes to the project finance, really enough?
No, because we want to do 3 things. We want to do the detailed engineering, which is going to be around, call it $20 million. We need to do finish the permitting, which could be upwards of another $10 million. And the third one is start ordering some long lead time items, which is probably another 10 to 12 million. So we're going to need around 40 million between now and say February next year. And we've got a third of that.
Okay, super. Thank you very much. Those were the 8 minutes. So let me finish that here. Yeah, first of all, thanks to our 3 contestants here with great presentations. Now we come to the big question of this afternoon. Who wants to invest in which company his $1 million? Because I think I forgot to say that in the beginning. The idea is that our investors each have $1 million, unfortunately virtual, and to invest into a company. And I would suggest that we go by the order as I have it here. And each judge tells me, like in 2-3 sentences, why he's investing or why his decision is to put that $1 million into this respective company. So Michael Colligan from Blue Lake, to whom you want to give your $1 million, please?
Jochen, as I recall, I can split it up, can't I?
Okay, let's half it, but that's the maximum, please, because
okay.
Otherwise I need another computer.
All right. Well, if it was half and half, there are 3 very good presentations, 3 very interesting stories, 3 very, very, very compelling stories. But I'd say Andean and Generation would get 50-50 from me. Andean looks ridiculously undervalued, and Generation has a very, very high upside potential. And as Kerry explained, a number of different options, all of which are potentially attractive. So that's what I would do.
Okay, super, half and half. Great. Then Victor Brophy from Terra Vista Partners, to whom you want to give your $1 million.
Yeah, I'm going to give my $1 million to Jurie Wessels. I think it's from a full perspective that there's a huge potential here. Only using 12% of the assets, there's a lot of unused value still in this mine. So I think that's where I would be putting my money.
Great, thank you. Then George Petker from Versatech Capital for Mining.
In my case, I'm going to go with Generation Mining. They all did wonderful reports. There's excitement to each one individually. My primary reason is the fast track that they're on, that they've already done. I like the reference to Skeena. I did well with that. And I think it can be controlled properly. And then if they don't buy it, somebody else will. And or they take it into production with the skills they have. So those were my primary reason. The other final one is it's a multi-stream asset, so you're not reliant on a single metal, but multi-metals.
Great, thank you. Then Taiwo Adeniji, Senior Director Investments Africa Finance Corporation, to whom you want to give your million, please.
Well, I will give to Jurie, Vanadium Resources. I think there is a compelling investment proposition there. There is a significant resource in the ground. Also, they seem to also have thought through the process from mine to cash. So I think my $1 million will be well spent in that corner.
Okay, to Vanadium Resources. Thank you. Last but not least, Paul Mainwaring, Associate Director from Endeavour Financial. To whom do you want to give your $1 million, please?
Well, it's very tough, as everyone said. All three great presentations, great assets for different reasons. Tier 1 and Vanadium, and obviously silly valuation for Andean. But I think I'm going to back Generation purely for Tier 1 assets, good blend of commodities. I think they've got a great to build the assets, and so my million would be with Kerry, but a tough decision.
Okay, super. Thank you very much. Then we have quite a clear winner. And this is Kerry Knoll from Generation Mining with $2.5 million. Second is Vanadium Resources with $2 million. I'm sorry for $500,000 missing. And Fraser Bucken, who gets $500,000, but honestly, with $100 million in cash, you don't need it really. And so really well done. Thank you very much. Really three fantastic companies, I must say. I really liked it. I'm also shareholder of Sibanye Stillwater, so I fully understand Generation Mining. And I wish you all the best, of course. Please stay healthy. That's the most important thing these days and times. And I really hope that we all see us in person having a lot of beer and gin tonic at the Mainz and Money in London. That would be really great. Yeah. So keep well. Also to our viewers here, thank you very much for joining us today here at this mining pitch battle. And I think you saw three exceptional companies with very good judges asking good questions. And this is how it should be, because information you should have before you start to invest. And so hopefully we could contribute to this today with this session. Thank you very much. It was a pleasure to be your moderator and host, and keep well. Thanks, and bye-bye from Switzerland.
Thanks, everybody.
Thank you.
Thank you very much, Jochen.